All right, let's talk about something every single business owner, freelancer, and side hustler really needs to get a handle on: tax deductions. Now, this isn't just about saving a bit of cash here and there. This is about understanding the system, getting financially literate, and really truly empowering your business. So let's dive right in.
Well, hello there. That battery can last up to 24 hours even with the always-on display turned on. It's pretty cool.
So let me just kick this off with a big question, one that probably hits pretty close to home for a lot of you. Are you paying more in taxes than you actually need to? It's a huge fear for so many people. And you know what? The answer is often yes. And it's not because you're being careless. It's because this whole world of deductions can feel like an impossible maze. But I promise you, it's not as complicated as it seems.
Okay, so here's our game plan for today. This is how we're going to crack this code together. First, we'll tackle what I call the deduction question. Just what are we even talking about? Then, and this is the big one, we'll get into the 2 golden rules that are the foundation for everything. After that, we'll see how to put those rules into practice. Then we'll cover the non-negotiable power of proof, and we'll wrap it all up by building out your financial toolkit. Sound good? Let's do it.
All right, Section 1, the deduction question. So, what in the world is a deduction, really? Before we get into all the rules and the nitty-gritty, let's just make sure we're all starting from the same place.
At its heart, it's actually super simple. The best way to think about a tax deduction is like a discount on your income that the government is totally okay with. It's a legitimate cost of doing business that you get to subtract from your total earnings before you figure out how much tax you owe. So let's say you make $100,000 and you have $20,000 in valid deductions. Well, you only pay tax on $80,000. It's that simple and that powerful. The more legit deductions you have, the lower your taxable income goes and the less you have to pay in taxes.
But why? Why does the government even do this? Is it some secret loophole? No way. It's actually by design. The government wants you to spend money to grow your business. They are actively encouraging you to go out there, buy that new piece of equipment, invest in marketing, and hire people. By letting you deduct those costs, they're basically giving you a little nudge, an incentive to do the very things that grow the whole economy. It's a total win-win.
Okay, now we are getting to the absolute core of this whole thing. If you only remember one part of this explainer, make it this part. Section 2, the 2 golden rules. Seriously, if you can get these 2 simple ideas into your head, you will understand the logic behind pretty much every business deduction that exists.
Golden rule number 1. The expense has to be ordinary. Now that word can be a little confusing. Ordinary doesn't mean it's something you buy every single day. All it means is that it's a common and accepted expense for someone in your industry. So for a graphic designer, a subscription to Adobe Creative Cloud is totally ordinary. For a baker, buying flour is ordinary. But if that baker tried to deduct an Adobe subscription, that might raise an eyebrow because it's not a typical expense for that trade.
And golden rule number 2, the expense has to be necessary. This is the one where people get tripped up all the time. Necessary does not mean you would literally go out of business without it. It just has to be helpful and appropriate for your business. Think of it like this. Could a consultant write all the reports by hand on a legal pad? Sure, but is buying a laptop helpful and appropriate for running a modern consulting business? Absolutely. That's what makes it necessary.
Let's break this down even further. Ordinary is basically the what. What are you buying? Is it something that people in your field normally buy? Necessary, on the other hand, is the why. Why did you buy it? Was it to help your business run smoother, or grow, or be more efficient? You see, they're 2 totally separate hurdles that every single expense has to clear. And this is the point I really need you to hear. It's not one or the other. It has to be both ordinary and necessary. Let's use a clear example. A wedding photographer buys a new expensive camera lens. Is it ordinary? Yes, photographers buy lenses all the time. Is it necessary? Yup, a new lens could be very helpful and appropriate for getting better shots and booking more clients. See, it passes both tests. That's the secret sauce right there.
Okay, that's enough theory for now. Let's get real. In Section 3, we're going to take these rules and see how they actually work in the real world, with the real expenses you're probably thinking about right now.
So here are some really common areas where you can apply these rules. Think about office supplies and software. That's not just paper and pens, it's that monthly subscription to your accounting software. Totally ordinary and necessary. What about business travel? Let's say you're a marketing consultant and you fly to a big industry conference. The flight, the hotel, that's an ordinary way to learn and network, and it's necessary for your professional growth. Or how about education? Taking an online course to get a new certification in your field? That's a textbook example of an ordinary and necessary expense. You just have to run each cost through that two-part filter.
So what about the trickier stuff, the gray areas? Let's talk about your car. This is a classic one. You use it to drive to meet clients, but you also use it for personal errands. So here's the deal. The part of your car expenses that relates to your business use, that's potentially deductible. Why? Because driving to a client's office is both ordinary and necessary. The personal part isn't. You basically have two ways to figure this out. You can track all your business miles and take a standard deduction per mile, or you can track all your actual car expenses, gas, insurance, repairs, everything, and deduct the percentage that you used the car for business. Either way, you're going to need amazing records, which brings us to our next point.
And that whole car discussion is the perfect lead-in to our next section, which is just so incredibly important. Section 4, the power of proof. Because in the world of taxes, there's a simple truth. If you can't prove it, it didn't happen. Period.
Look, keeping good records does not have to be this giant, awful chore. Here is a super simple, three-step system you can start using literally today. Step 1, capture. The moment you make a purchase, take out your phone, snap a picture of the receipt. Done. Step 2, note. Right then and there in a Notes app or a special expense app, just jot down the business purpose. Something like lunch with Jane Doe to discuss new project. Step 3, organize. Just save that photo to a cloud folder, maybe on Google Drive or Dropbox, called Business Expenses 2024. That's it. Capture, note, organize. If you make that a habit, you'll be in fantastic shape.
This says it all, doesn't it? Good records are your best defense and your greatest tool for financial clarity. They are absolutely your best defense if you ever face an audit. But just as important, they give you a clear, real-time picture of your business's health. You'll know exactly where your money is going, which helps you make way smarter decisions moving forward.
All right, let's wrap this up and bring it all home. Section 5, your financial toolkit. Because at the end of the day, understanding this stuff isn't just about saving money on taxes. It's about taking control of your financial destiny.
I really want to help you reframe how you think about all this. This isn't about finding sneaky loopholes or trying to pull a fast one on the tax man. It's about financial literacy. It's about knowing the rules of the road so you can operate your business with confidence, knowing you are paying exactly what you owe, your fair share, and not 1 cent more.
So let's just quickly recap the absolute must-knows. Number 1, deductions lower your taxable income. That's how you save money. Number 2, every single deduction has to pass the 2 golden rules. It must be ordinary and necessary. Number 3, proof is everything. If you don't have the record, you don't have the deduction. And finally, number 4, all of this together is what helps you become a truly informed, proactive, and empowered business owner. So I'll leave you with a final question, a little challenge. Based on everything we just talked about, what is the one business expense you have? Maybe it's those client coffees, or your cell phone bill, or the miles you put on your car. What's the one thing you are going to start tracking differently starting right now? Deciding on that one thing is your first real step toward taking total control.